Today I'm going to talk a little bit about our company, VeritasPay, and also Smart Card Marketing Systems. So VeritasPay, thank you for the kind introduction on who we deal with. We're really at the core foundation of payment. We made a decision a number of years ago to focus on that. My history is as a banker, and everything surrounding banking to do with payment. But a number of years ago, we made a firm decision to move in the direction of mobile. So by keeping everything at the foundation of payment, and our system is built to manage banks, acquirers, large enterprises, but more importantly, we knew the whole world was going mobile, so we went that direction. So our core focus and everything we do as a software development firm is delivering the latest payment technologies to the world, whether they're e-commerce or card present or terminals, it didn't matter. But we realized we had a gap in our system. As we focused on payment, the whole world of financial technology was crashing down on us. So what we did is we made a decision and we made a major investment in a North American firm called Smart Card Marketing Systems. Smart Card is a fintech acceleration company, fintech development company. They have about 12 different platforms. They didn't have payment, we didn't have fintech. So we thought it was a great opportunity, so we invested heavily into Smart Card. And because of that, we developed jointly a platform that we call Granular Chain. Won't mean much to you now, but I'll take you through the journey of why we built it and what we're doing with it. But it's a new methodical approach to the blockchain. It's really an exchange engine. Probably, again, doesn't mean a lot, but I'll carry you through the story. It's used for eKYC and authentication of transaction processing for e-commerce, ICOs, and virtual currency exchanges. The reason we built it was very specific. We had a client. Client's called AxePay. AxePay is a cross-border platform that has one of the unique licenses coming out of China where they can move money in and out of China without going through the government's safe system. Fully authorized, fully licensed by the PRC, but they had an issue. For 3 years, they were trying to build a platform, and the platform had to deal in over 120 countries, 150 countries, 120 currencies, and it was mind-boggling to them, and they couldn't get it done. They ran into us and Smart Card. So they asked us to build a solution that could do merchant onboarding globally, could do KYC globally, comply to the rules and regulations of every one of the countries that they're dealing in, which is the SEC and the central banks, and be able to run and move funds in and out of those countries seamlessly. Big task, but we did it. So we had to build a merchant registration and onboarding system. We had to design it to be seamless. Again, it's all interacted and coordinated with one of the world's largest foreign exchange companies. So we built that front end for them. So they have the ability to register documents, get approvals, allow them to sign up clients and know specifically if that client is a risk to them now or in the future, because they have merchants all over the world. And of course, they had to integrate that with a payment solution. Big job. So that's why we developed Granular Chain. It's really the world's first digital key and transaction vault. We allow it to connect transactions globally, and those transactions could be anything. They could be a financial transaction, a KYC transaction, a movement of documents, invoices, all delivering KYC, know your client, AML, anti-money laundering legislation compliance, privacy and transparency, all those things. So we came up with two real solutions. One of them, Granular Chain, and its really focuses on ICOs, initial coin offerings, and virtual currency exchanges, who we talk with every day. And we sliced out a component to give secure merchant and client KYC and onboarding. And we made that electronic KYC because we knew everywhere we're going, we could not visit those individuals by themselves. So without going into real specifics, essentially what we built for financial institutions, global enterprises, Ecomm companies, in anticipation of all the digital currencies that are going on. And you hear about whether it's a ICO for a coin, whether it's money-based, coin-based, rewards-based, or any type of system moving transactions. I had a great discussion with John earlier on from PearlPay, and we don't just move money. Money can be an exchange of value in anything. So we had to keep that in mind as we went through. So we took that approach and we ensured that we can do the KYC, the eKYC, the ALM, and the privacy. We run it through all the crypto markets, and we, more importantly, have embedded everything within our blockchain so that we can have third-party authentication on such. So our admin portal keeps track of all records, make sure they're secure, and we can determine a client's propensity to commit bad things: money laundering, terrorist financing, or identity theft. That's all built into our system as we do the initial KYC of the individual. So we provide our clients, and they can be ICOs, virtual currency exchanges, a secure platform, and a digital ID token. It can be used for everything. We think it's an exciting time for us in digital commerce, and you'll notice for us, digital commerce is everything. It's not just a website. It's virtual currencies, points, e-coupons, and it can be delivered online through QR code, barcode, NFC. We're starting to work with inaudible sound waves. New technology coming out of Korea is pretty cool. Tap, swipe, dip, MyFare, which is the closed-loop transit systems, and some new stuff coming out from Visa and MasterCard. It's called Tap on Glass and Pin on Glass, and that's turning your smartphone into a secure payment device. So we're working on all those leading-edge things to allow our clients to easily transition into payment. Of course, we process all the standard Visa and MasterCard and such, and do everything on an online one terminal that does everything. That's another story. But our recent challenges all surround eKYC and the trouble that ICOs, Ecomm companies, and virtual currency exchanges have with their clients. I'll go over a few things in the world, because it's important for you to have a little bit of a foundation of why all the rules are coming out and why there has to be a bridge between e-commerce, digital currency, and the traditional payment world. Everything's regulated mainly by two industries, the banking and securities industry, by two bodies. Here in the Philippines, it's the SEC and the BSP. In most cases, in most countries now, with the advent of crowdfunding, which allows small businesses to very easily raise funds, is that the SEC has taken a primary role in regulating. So whether it's crowdfunding or ICOs, they're saying, listen, if you're going to want to play in our territory, you're going to have to follow our rules. And those rules involve how you deal with the people, our citizens. And usually there's investors, accredited investors or non-accredited investors. The accredited investors are those people who, on an everyday basis, make investments, do it at a large amount. The SECs and the BSPs of the world understand that these people and these companies know what they're doing. They give some broad rules, compliances that they have to follow, and every country is different, and every country has an accredited investor. They also have non-accredited investors. Those are the little guys. Those like me and you want to invest a little bit as low as $50 and do something, whether it's in an ICO or whether it's in some new company, or do some crowdfunding, maybe go up to 1,000, all for a reason that we're going to receive some benefit. Maybe we're going to have a discount on a new product coming out, or maybe it's actually a small investment. That's where the issue comes in. The central banks and the SECs and such want to step in and they protect us from ourselves so that we don't go through and make crazy investments. And one of the major challenges that these new digital companies and sometimes e-commerce companies have is they lose sight of their requirements to know their client and ensure the anti-money laundering rules of the country are followed. These issues won't go away. They're only going to get more and more exacerbated. They're going to make it more difficult for companies to comply. Then you complicate things and you add a blockchain and you add masking user identity. And those are all things that happen every day. Very difficult to control the KYC and AML. And the bank's answer and the credit card company's answer to that is very simple. We're going to block certain transactions. We're going to restrict uses on accounts. We're going to do everything we can to protect ourselves, because as a banker, and I'm a 35-year banker, I don't want to deal with anybody I don't know. In fact, I can't deal with anybody I don't know. And I have to make sure the clients that I have also know who they're dealing with. So those are the challenges of the new companies coming in, complying with the banks and the standard traditional payment world, is doing all that compliance. As we go through and start dealing with the world of going from crypto to fiat and fiat to crypto, and having funds that can't be traced, the banks will come down even harder. So what's the solution? We think it's imperative that KYC is the primary focus for all companies regardless of who they are. We deal with ICOs and virtual exchanges globally, and we talk with them every day. And it's shocking how many of them don't believe they have a responsibility for KYC or anti-money laundering. And what they're finding out is it's restricting them from coming into our world. And our world is a traditional payment world that we live in. So as the trend moves to digital currencies and tokenization, and the conversion of fiat to crypto and vice versa, these companies now have to start complying with all the rules that we live with every day in the traditional world. Listen, face it, everything we're going to talk about today is fantastic. E-commerce reduces costs, enables us to expand. Small companies here will be able to do global expansion. They create seamless digital experiences, just like QuadX LBC. Mia just talked about all the things that are super about e-commerce. But behind that, for every opportunity we put out there, Mia maybe only works 50 hours a week, 60 at best. The bad guys work 24/7, 365, looking for one little slice to get into your company, expose it, and give you guys a problem. There's massive fraud scenarios in loyalty, cross-border transaction, last-minute purchases. Fraud is becoming a major revenue loss for a lot of companies, whether they be e-commerce or ICOs or even on the virtual exchange. We're dealing with one company that over consecutive months, on each month, lost in excess of $7 million a month on fraud. They needed a solution. They came to us, we developed it, we turned an e-commerce transaction into card present. A little bit complicated, we're one of the first people to do it, we're first companies to do it. But even despite all these losses, a lot of these companies aren't devoting the necessary resources for tracking and the required metrics to control fraud. Why? It's not part of their DNA. As John and I were talking, these guys are entrepreneurs. They're building things in garages and basements and small offices and developing really cool stuff for the world. They forget about the basic things that are going to be required once they get into the real world of traditional payments. They have to add people, and they can't because they're all in expansion mode. There's personal biases when you start looking at eKYC or KYC. You have individual have to go over each application one by one, and it becomes difficult. And we were facing that when we were dealing with AxPay, because this global foreign exchange company was still doing all its KYC by paperwork. It had mountains of paperwork. It had people working at it. They were making mistakes. They couldn't follow rules. And plus you had to throw in the 120 different countries. It just became too enormous for them to do. But if KYC is done correctly, it's going to mitigate your fraud, your identity theft, hacking, money laundering. And as the trend grows more and more and more, the market's going to require, it's a medium, a conduit, a channel of secure, transparent exchange, not only of that transaction, but of personal information. And our regulators are getting serious about this. I just pulled these, and I hope you can see them, probably can't read them too much, but it's nonstop. And I just picked out Southeast Asia, whether it's Korea, Japan, the Philippines. They're saying, if you're going to play in our sandbox, you better start following our rules. And if you don't follow our rules, we're not going to let you play. So you have to, as an e-commerce company, you have to understand that people you're bringing in to your site and who are paying and your clients, you want to know who they are at all times, because the more you know about them, the better chance you have at mitigating risk. The most interesting headline I saw in the last while was this: China's central bank wants a digital wallet to track cryptocurrency deals. They want to know everything. They want to know who that was from, where the source of funds were, where they come from, how many deals. They want to know absolutely everything about that transaction. And that's China. And that's just a start. And I think you're going to find more and more as you start your companies and you start expanding, you have to consider all this stuff. So it comes back to granular chain. The new method. We're connecting transactions globally, and we provide our two solutions. One, of course, for the ICOs, another one for merchant onboarding. We believe it all starts at the application level. And we've put a lot of work into this to set it up so it will work globally. We collect information. We want to confirm the ID of the individual. We need to know if it's politically exposed. We have to be able to monitor those transactions and determine what their future behavior might be. We take all the personal information. We can accept documents, files, biometrics, videos. We can do immediate confirmation of input. So me as a client putting my information in will get a secure SMS coming back to me. We'll then let our client know if that's a real company and a real person, and if they pose a threat or not. Pose a threat, don't pose a threat, maybe might pose a threat. We even go into social media attributes. We go into about 60 social media sites. We get the identity confirmed through those. There's an opt-in feature that ensures privacy, that all the government rules are putting in. We vault it, we secure it, and we tokenize it within our own blockchain. And our new plans are we're going to even add more security and put it behind our own firewalls that are PCI compliant, running everything through what we call an HSM. Our techies in our company tell us our level of security is going to be 256 cubed. It's a big number, and we think that that security aspect of it, especially on our global trading, is a requirement. Again, we'll get those minimum 3 points of ID verification. We have 700 plus data points and hash verification that we do in order to determine the threat assessment. We do the social media verification. We log everything. We provide single or two-way SMS authentication. We generate unique keys for the merchants and the consumer with their own QR code. And of course, we have APIs for internal use or external. It's really a crazy world that we live in. And we have to build for ourselves, for our clients, a way to protect our client and protect our clients' clients. We have to ensure the integrity of every transaction. And if you take all the buzzwords, ICO, blockchain, security, regulation, SEC, BSP, it's like we took all the buzzwords, threw them in a blender, and came out with a solution to protect everybody as they move forward and allow us to create tokens to share that information securely. We've essentially built that bridge to enable global compliance for all our clients. So with that, I wanted to make sure I took only about 17 minutes of your time. As a payment company, it was our responsibility to make sure that our members, our clients, and our partners, all their information is safe, secure, compliant, and also allows our clients to protect themselves from the bad things going on in the universe, at the same time complying with all government regulations. So with that, Richard, I will let you go. Thank you very much for listening to me and about the cool stuff we're doing over at VeritasPay. Take care and have a good morning.